banker friends here will tell you what are the benefits of priority sector advances. They are not opposing it. None of them. In fact, all of them are, many of them, they have done a lot of various
possibly he would want to respond.
No,
Yeah.
he's trying to
Regulate.
talk on the net of effect on the PSL side on the net advances. That is peanuts compared to the losses the banks make.
About the KSC norms, but sir, please.
So, let me supplement Mr. Hirve what he has said on a couple of questions raised by the youngsters here. At the outset, let me tell Mr. Hirve that it is not only the youngsters who will support you, so long as they are in the interest of improving the growth, improving the economy, and in the interest of the largest segment, it is youngsters or elders, all will support any action. Unfortunately, what is happening is today is that we have two types of regulators which will have an impact on the functioning of the bank system. One, the Reserve Bank of India, a regulator from the banking angle, and a SEBI. SEBI is the Securities and Exchange Board of India. In fact, whatever scams that have happened, whatever problems we have faced in the market, may not be necessarily on account of the regulations of the Reserve Bank of India, mind it. It may be because of the regulations of the SEBI also. And as much as Reserve Bank has taken some regulations, maybe afterwards, proactively or thereafterwards, sometime post-mortem also, SEBI has also, to that extent, had not been able to perceive the problems and take proactive action, which has resulted in so many things today. Though we have had a lot of scams, it was not adequate enough. I will give a small example. When the stock index was 3,000 to 4,000, and because of the open market and liberalization, etc., and maybe as a part of the process of the reforms, the index went to 22,000. What was the spontaneous response in the whole market? They said economy is growing. There is a tremendous manufacturing industry growth, services growth, and this is the real growth that takes place, and whole world is proud of India. I am only telling what has been read in the press. Who said let us not talk about it? Everybody took credit for 22,000 index, stating that India is emerging as a very strong economy. The whole country is bubbling with the economic activity, but there is beyond expectations, GDP is going to take place, growth is going to take place. And what is now? What happened now? Who is claiming the credit? Now again they say they want more regulations, that we should not allow the market to operate in the way it was. So more stringent measures are required. You see, this is where the role of regulators has not been adequate enough. Adequate enough. Perhaps had they pursued in the way the problems had come up and had taken appropriate action then and there itself, while the index moved from, if not to 21,000, 10,000 itself, to find out whether it is real growth, I think perhaps we would have saved a lot of money for the country, and saved poor investors who have, of course, at their own risk, pledged their homes, pledged their jewels of their wives, and invested the stock market, hoping, assuring the wife that you will get double in 3 months if I put in Satyam, double in put in Infosys. That is what happened. And today, neither the jewels are there, nor the houses are there. And that is where, apart from the farmer suicides have also taken place in the broking community, which has suffered a large reaction because of this fiasco that has happened in the market. Leave apart. This is one part of the question. Now,
I think we are missing the SEBI representative here. Possibly he is setting a tone for the next year's agenda.
No. This is where.
It is represented by us here, because when I did say that there is a need for a consolidated supervision.
Correct, exactly. That is where I am trying to tell you. What is required is that banking system doesn't solely depend upon the banking regulator, Reserve Bank of India only. There are peripheral areas working, because when the stock scam happened, naturally, you see, even bank had a sufficient exposure in the stock market. Of course, it was considered a sensitive sector exposure, and that was regulated. Nevertheless, when the market boom went up, naturally banks had higher and higher exposure, and perhaps in the process banks would have also lost money in the process, and they may be taking recourse to various actions. Now, another point which is relevant here is that you talking about the securitization. You see, these hedge funds, derivatives, and so many complex instruments have been brought in knowingly. And what is the problem with the Indian banks is that because it is a complex product, unless you understand and digest this, everybody should not play. This mistake has happened on the part of some players also who have lost in the market. But nor the regulator nor anybody, your regulation prohibits you from doing it. I am particularly referring to where you said that we should stop driving. In fact, I have used this word in some other context, not in this context. You see, this securitization or other things are still there. These are the complex instruments, and anybody whenever try to play on this market with these instruments, first thing you should do is you should digest this first, understand the complexities, and then only play in the market. And coming to your second point on financial inclusion, I do not agree whatever you have said, because I myself personally involved in this development of this financial inclusion technology process in the way I visited various areas. Let us not let us remove from your mind that KYC is a deterrent. You see, all that I am expecting, because I personally visit the villages, all that I am looking for KYC is that identification. So long as you are able to give an identification that you will belong to so and so, you are born in such and such a family, and your father owns it, you have a ration card, or you have some village panchayat who is confirming that you hail from this place, I don't think there is any. But in the long term, yes, I myself has advocated. In fact, I am one of the member of the committee wherein Finance Ministry is now thinking, perhaps some of you would have seen in the papers recently, that they are coming out with a plan wherein One India, One Account. One India, One Account.
3 days back it was in the press.
Yes,
One
wherein
India.
whole country, no matter which bank you are dealing in, we are coming out with a project where if you have one account in one bank, you can operate accounts in any of the banks. Because of the technological developments, what has happened today is that core banking is so sophisticated and so capable and so robust that it is able to deliver the best to the world. So our effort now is that having stabilized this core banking system in the industry, we want to leverage upon it and see what best derivatives can be done upon it. Now, the next phase, what we are looking for is the interconnecting. If one bank can connect 10,000 branches like State Bank of India or Corporation Bank for that matter, if we can link all bank branches together, why not all banks together? This is perhaps a question. It has already taken place as far as the ATMs are concerned. No matter which bank ATM you are holding today, if you are having an ATM card, you can operate any of the ATMs of any of the bank, right? So, same technology, you are trying to upgrade it so that one bank, one account, you can make it so that no matter which bank you are having an account, you can operate any other account. And this requires that before we move to that platform, perhaps we structurally make a very strong foundation of our clientele base. Because once it becomes open, we cannot say that. That is why this KYC is a very important aspect. Not because that we are depriving the people not to come to the bank account, but because we are interested. Because once a bank account is there, we have to ensure that it is properly protected and he gets that is what one of the objectives of the Reserve Bank is to ensure that the trust of the people who have kept money in the bank has to be reposed, and that has to be honored. That is why KYC is equally important, and all that banks are taking care to ensure in KYC is that there is no impersonation. There is no impersonation. A wrong person doesn't claim that I am so and so, it is my money belonging. Because if you can get a check of somebody else's, you can say, I pretend himself to be that man and encash that. See, it is a protection. And third point you made is about banks, what is that?
Priority sector.
Priority sector. You see, again, I told you that so much population is not covered. And banks are absolutely not against your lending to the priority sector. But banks are necessarily against wherein this 65,000 crores of debt is written off but by the exchequer and given as a benefit to the borrowers. Not because, of course, it is a government policy and we are not competent to comment upon that. But what is hurting is that the repaying culture of the borrowers is go. So, because there are so many instances which we have represented that the cutoff date for write-off was February. And there were a lot of non-performing asset accounts of poor borrowers, poor families who settled the accounts for a compromise either by selling their lands or otherwise only in the month of January or December. So this is where they have lost heavily. But the scheme doesn't permit them to do anything. So this is where the repayment culture, the borrowing culture, the banking financial assistance culture, that is being destroyed. This is what the banks are against. Again, so long as it is a policy of the government, we cannot comment upon that. But let me assure you that banks are, we are owned by public sector banks, at least to the extent of the public sector banks I am telling you, we are owned by the government of India to the major stakeholders. And we have a social responsibilities also to ensure that we not only do banking business, we not only do make profit, we also make commitment to the development of the economy by making necessary finance available for the growth. That primary responsibility we cannot shirk off, which is not perhaps there in some other banks. But there is also, if they directly cannot lend, there are also ways upon it. Therefore, primarily remove from your minds. But I want that you youngsters should fight for this write-off culture. You see, tomorrow you take education loan. Leave apart for a moment that you are a student, and instead of when a farmer loan can be written off, why not a loan of a student? That type of culture will come. So today, the government is even now thinking of creating a educational loan fund that in the event educational loan borrowers do not pay, there is some fund to subsidize. Again, this is again a method in which the culture of the people. I was talking to some of your colleagues here. I was proudly telling him that our experience in the bank is that educational loan by the students who have taken loans to get themselves educated and repay it after they complete the course A, and B after they get the employment, 99%. I am proud to say this. But in the same time, now government is thinking of creating some educational fund like the 165,000 crore they have written off to the farmer borrowers, so that in the event of any educational loan going bad, because they want banks to lend, of course that objective is laudable, no doubt about it. But this write-off culture is very great to the whole banking system. This I am openly telling, but we have very little choice because it is as per the
Thank you,
government
Mr. Bhatt.
policy.
Thank you very much. And then any reactions on KYC or priority sector? Briefly, sir. 1 minute, please.
Directed lending as a concept is bad. That's my personal philosophy. And priority sector lending falls straight into that, because the whole program, whatever be the ostentatious professed intentions, the whole program is carried out by persons who are not connected with banking, but who have solid influence to influence the bankers in many ways, more ways than one. So directed lending as a concept is bad, and in India, it has led to huge hit on the portfolios of banks. Just a couple of other reactions. CRR, SLR is resorted to as a last resort. I personally differ with that. Today, the moment some market reaction has to emerge from the RBI, all the pink papers flash that CRR will be cut. It is not the first resort of RBI. It's not only the first resort of the RBI, it's the first resort to the editor of all the economic papers. Okay, so that is the place where we are. And I think...
KYC, any response?
KYC, I have already said that some sort of a social code should come up. And the experience of banks in India going abroad has not really been good. If you look at, let me name State Bank of India, fined with hundreds of millions of dollars in New York by Federal Reserve Bank for several anomalies. Bank of England saying your accounts are not reconciled, close down. What they're doing is ethnic business, and there are a lot of issues, and banks as a whole have not done. There is one bank based in, whose London branch has not sent reports to its central office financial statements for several years. So the state of affairs, Indian banks have not been really, the case of ICICI Bank taking a hit in the Los Angeles, Chicago, and all those operations is one of the part of the reasons for all the bad news about ICICI Bank providing $225 million in the last year itself. But finally, regulators are regulators. Alan Greenspan, the major statement associated with him, the major phrase associated with him, I'm not associating it with Mr. Hirve. The regulators are regulators, irrational exuberance. Thanks.
In fact, to clarify, KYC started because of the 9/11, Osama bin Laden, how he has mobilized funds. Thereafter, world over, they got elected. But it should not be such draconian for smaller accounts, laborious filling of the forms, etc., etc. That should be possibly discouraged. Priority sector lending, in fact, Narasimham, he himself was a governor of Reserve Bank of India. He recommended in his first committee report that it should be brought down to 10% for whatever reasons, question mark. that has not been accepted by the government of India. They continue to keep it, I am referring government of India, not Reserve Bank of India, 40%. Whereas for foreign banks, they ask for 32%, which they never lend, but simply deposit in NABARD funds or say SIDB bonds or whatever it is.
RIDF.
So this, that's how they make it up. Really, they don't do developmental lending and all those things. Any other questions from the audience, please? Don't hesitate. Yeah, please. If you have the mic, please pass on to him. Please introduce yourself and name the person whom you are addressing. Please. Okay.
I have two questions.
To whom are you addressing?
The first one is for our banker friends here.
Okay.
I heard both of them agreeing to the fact that there needs to be a certain level of regulation. What level of regulation are you looking for? Because if you say regulation, probably our RBI will say we will run the bank itself to that level of regulation. Are they happy with the current level of regulation?
Do you want it to be quantified, 100% or 50%?
No, are they happy with the current level of regulation, like what is being happening right now?
I would like to have more deregulation.
I think here and all, Parthasarathi has been mentioning that he is not all that comfortable with the regulator. Okay.
I'll go with the second question also. Second question is for our RBI. Our RBI was saying that, they are concerned more of the depositors, about the depositors and interest.
Yes.
Are they only concerned about the depositors, and what about the, borrowers? Our bank of friends many times give out different products, like our personal loans, which charge a hefty interest rate, in a very good product, attractive product.
So your second question is to Mr. Hirve.
Yeah, exactly.
Okay.
Does RBI need to extend the regulations to even to protect the interest of the borrowers as well? And basic question is, does it require more regulations to be added to our regulations?
Okay, sir, one of you can take it. I think Ms. Parthasarathi will take it, saying that.
Now, I am an unabashed votary of free markets, and I have no qualms about saying that. And the point is, Reserve Bank had only regulated rates on several areas, very tight regulation, but finally they came out of the shackles and released to the point where, at one point of time, the interest rate on NRE deposits, SB deposits, was linked to LIBOR. I mean, an interest rate in India was linked to the LIBOR. So definitely a lot of deregulation took place. The ideal situation where banks should evolve in such a way that the deregulation is used effectively and it becomes self-regulation. We should move from over-regulation is not the solution. Over-regulation will strangle the system. Ultimately, the maturity in the banking system should lead to one of self-regulation.
Mr. Bhatt, your response to the first question.
I say that regulation is important, and in a process of reforms, you cannot over-regulate. You need to regulate. I would compare the type of regulation. See, you go to foreign countries, you can drive up to 250 kilometers. And they say the minimum speed you should drive in this road is 200 kilometers. That is the regulation. Whereas if you go by 200 kilometers in a road like Manipal or Mangalore, it is impossible to imagine like that.
You will end up in a hospital.
Yes, you see, the development of infrastructure. If you are able to develop a sophisticated infrastructure to drive at a 200 or 250 kilometers vehicle, perhaps that is a regulation. That is a process of deregulation. And once you are put in system, the systems will work. But unless we are strong, we build up a strong foundation.
Mr. Hirve may respond to...
it should be in a phased manner.
Both the bankers as well as the second question, please.
Yes, how to regulate it?
Please permit me. Mr.
Okay,
Hirve will
I
respond to
now
both the
react
second
to
question
both
as
of
well as
them,
the bank.
both the questions, even though it is not put to me. Even if the bankers want, we will not run the bank. Okay, that is for sure. It is their job, they have to do it. And they are good at it, they will do it. Okay, we will do what we are good at.
What a confidence.
Okay, yeah, we force them to do it. And second part of that is whether regulation or we have ourselves moved last 15 years from micro regulation to macro regulation. And there has been a tremendous shift in the regulation. We have not deregulated, but we have moved from micro to macro level regulation. And coming back to your rate of interest, as I told you, we have already told the banks that you fix your rate of interest, taking into account certain factors which are totally logical or analytical. Now, they have to be, now there are lots of complaints which do come to us, and let me correct myself. When I said that it was in lighter vein, depositors' interest is what has been given to us by the statute, and all other is accepted by us as our own responsibility, and therefore we do protect the interests of the customers of the bank. You said about the rate of interest, but there is one more area of gray area of the service charges which are charged by the bank, which are quite exorbitant, and there are lots of complaints.
If I may have to add, it is productive lending or productive purposes or non-productive purposes. That's what they see. So these personal loans comes under consumption or conspicuous consumption. So naturally the higher rates of risk.
Yeah,
Whereas
risk
the priority
pricing.
sector, for
Risk
exporters,
pricing.
farmers and small scale, it will be
risk
less.
pricing which is done, and there we are saying that there should be more openness and transparency in that. As far as the customers' interest are concerned, let me say now, you correct myself, customers' interest, large number of measures have been taken by the Reserve Bank to protect the interests of customers, not only depositors or lenders or borrowers, but also walk-in customers who go for purchasing a draft or transferring funds. And the BCSBI bank, the Standards and Codes Board of India, that has been created by Reserve Bank
Last year.
as an outside